Hello, everyone, and welcome to today's webinar. My name is Anna, and I'm with the New Mexico Small Business Development Center. Today, we have Vic Berniclaw joining us, who is a SCORE certified mentor specializing in technology and business management. Vic will present Putting Your Business Ideas into Practice. Thanks so much for joining us. And without further ado, I'll hand it over to you, Vic, although I did the same thing that I did last time, which is not update the title. So would you mind letting me know?
I will. I've got it in the title, so we're in great shape. Thank you, Anna.
You're awesome.
Good
Thanks,
afternoon.
Vic.
Good afternoon, everybody. Welcome to a brief session on how to convert your business idea into a profitable business. To begin with, again, my name is Vic Berniclaw, and just for background purposes, with my wife and son, we started a couple of businesses several years ago and got them up to about 30 employees and a couple $1 million in annual sales. And we turned the businesses over to our son, and they're his businesses. Talked to him this afternoon. He's doing fantastic with expanding the business. They're his businesses now, but it's a wonderful, wonderful opportunity, and it's a great challenge to consider being an entrepreneur, or if you're already an entrepreneur and expanding your business. All the concepts that we're going to talk about today are applicable either to a startup or if you want to make a major expansion in your business. So let's get on with the efforts. To begin with, I want to make sure you got your audio muted and you fit your Zoom to fit window. And the questions, if you would please hold your questions to the end. We're going to have time at the end, and I'll stay as long as necessary to answer any of your questions of a business nature. So keep them noted, and then we'll hit them right at the end. This obviously is funded through a remainder of the COVID funds. There are a number of links here that in the event you're interested in any of the COVID information, it's available to you. And you don't have to worry about jotting a lot of information down because the SBDC is going to send you a set of the view graphs. There's a number of links we're going to be talking about, so don't worry about jotting them down. You'll get the view graphs and you'll be able to use the links then. Don't forget, SBDC has a fantastic training arrangement. Take advantage of that, especially particularly since the price is right. You can get a whole education here, and the cost is great. Don't forget also counseling, and we'll be talking about that. Really necessary. So here we're giving a shot how to take an idea and how to turn it into a profitable arrangement. To begin with, you have to have 3 things to have a successful business. This you got to burn into your mind. Number 1, you have to have a business idea that customers will pay for. You say, I got this fantastic idea. I work with people, for example, that says, I don't need to go talk to them. This is such a fantastic idea. If they didn't do it, they'd be stupid. Well, whatever they are, they have to decide, not you. And they are the ones that are going to pay you the money. So they are the judge and jury of your business. Number 2, you have to take that idea and turn it into a plan. We're going to talk about different planning arrangements and how to do some very good one-page business plan arrangements. Number 3, you have to take that idea and that plan, and you have to create the administrative platform to implement it. A lot of administrative things to make a business a success. And we're going to be talking primarily about number 3, but we're going to hit each one of those. So number 1 on the idea, you have to have a significant customer problem. If you do not have a customer problem in the mind of the customer, not in your mind, but in the mind of the customer, you do not have a business. Your business is to provide a solution for a customer problem. So what you want to do is you want to go out and find what that customer problem is and come up with a solution, and you've got it made. How do you find out? You go ask. People tell me, well, I don't have time to go ask. Well, I said, how much time do you have for a business bankruptcy? Because you will definitely go bankrupt if you don't have a solution to a business problem. You got to find that solution, and you have to test that solution with the customer. I understand, Mr. Customer, that you have this kind of a problem in my particular area of expertise. Can I come up with a solution? Of course. Okay, you come back. Here's my solution. Well, that's okay, but you didn't. Fine. Let me go away and modify that and come back. You come back and you finally get the solution that, hey, that's exactly what I want. Good. Write me a check. Give me a purchase order so that I can go out. Once you have the problem and you have your solution that the customer will pay for. Then you end up saying, who else do you know that is somebody else that you know that might have the same problem? You line up enough of these customers, and then and only then do you start the business, because you know that you got a business perfected. In other words, if you try to, like the old movie, build it and they will come, so many businesses did that, and they opened their doors and they didn't come. That's defined as bankruptcy. You're out of business. You have to find the problem, find the solution, find enough customers, and then open the business, and you're assured success. Okay, if we have an idea, how are we going to plan it? Well, there's a couple of ways that you can do planning. There's a formal business plan. I'm sure that all of you have heard. If you go onto Google and put in business plan, you're going to come up with thousands, if not more, hundreds of thousands of business plan ideas, all sorts of them. The problem is, for example, I had to do a business plan. We bought a building, and I had to go out and get a $500,000 loan for a building. And we started out very small. In fact, we started our business in the very room that I'm giving you from this webinar, and our inventory room was the closet right behind me. And we migrated up to larger and larger and larger, and finally I bought a 7,000 square foot building. I had to come up with a business plan for the bank, come up with a full business plan, lots of attachments. That sucker was about 1.5 inches thick. The bank loved it. I couldn't run the business with that because it took too long to build, and it took too much time to try to update, because as soon as you got done, you were out of date because there's new information available. So what's an alternative? It's something that we call a one-page lean business canvas plan. Specifically, what SCORE locally has done is taken the previous lean business plan. It was created, first of all, by a gentleman by the name of Osterwilder in Switzerland. And he had like 9 blocks. And we've added some blocks because we didn't feel it was quite complete. So we go through, we're going to go through these blocks on this one-page business plan. And the way you do it is you can take each one and you can put a little 3M sticky on there. You can write on it, whatever you want. But this becomes your one-page business plan. And if you ever have to make a business plan for the bank, you take it right off of this. You take the information out, you put some more words with it, some attachments, and you're all set. Okay, this particular business plan has the block starting with the upper left, and it is a problem. Remember we talked about problem? What is the problem? Not in your mind, but in the mind of the customer. Next, what is the solution? What's the solution that the customer is going to buy? Third one over, who are your customers? I've had people say, well, everybody's my customer. Well, I said, then you better have an infinite amount of money, because you're going to have to market to the world. And I don't know how much money you've got, but I don't think you got an infinite amount of money. No. Says, okay, then you're going to have to focus. Who is your customers? Is it young people? Is it old people? Is it people in Albuquerque only? Is it people in the Northeast Heights or the Southwest or whatever? Is it people who live in houses? I mean, live in their own houses, apartments, have a car, don't have a car, whatever it is, you have to define that, and then you can market to that organization. What is the product or service delivery mechanism? Are you going to go out and deliver the mechanism or the product or service personally on site? Are they going to come to you? Are you going to have salespeople that go out and deliver it? Is this going to be online? So you have to decide how you're going to get to them. What's the value proposition? That's a fancy word for how much value do they think your product is, because they have to value your product more than they value the money that you're charging them. Because the only way they'll give you money is if you give them value greater than what they are going to pay you. Left-hand side, second line, competitive advantage. If you don't have some kind of what's called an edge, a niche benefit, then why would people come to you? They're going to go to your competitors, because your competitors are already established. They're there. They've been delivering. You're a newbie. Why would I trust you? I'll just go to them. You have to have an edge. Either I'm going to deliver the product that you can't get from somewhere else. I'm going to deliver a product that is less expensive or better quality, or I can get it to you quicker. Whatever it is, you have to have an edge, and you can advertise that, and you can compete with others on that edge. Be careful about being cheaper, because if you get too cheap, we're going to talk about that, you have something called a race to the bottom, and you can bankrupt yourself very easily. Marketing is, how are you going to reach those customers? Is this going to be door hangers? Is this going to be social media? Is this going to be person to person? How are you going to get those customers? Number 3 on the second line is sales. How am I going to sign them up? I can reach them. Sure, I can reach them with door hangers, but how do I get that sale? Do I call them on the phone? Do I go knock on their door? Do I send them? Whatever it is, they got to think about how I'm going to get them to sign up. The key resources, after you lay out your plan of how I'm going to do this, am I going to have people? Am I going to have a store, facility? How much money? And we're going to talk about how much money you're going to have. Risks, the far right-hand one on the second line. Not enough people think about what is the risk involved. And what you're doing there is you're saying, what is the thing that could possibly happen and may not happen, but it might. And if it does, what am I going to do to take care of that? It might be insurance. It might be a better design. It might be a partner. It might be I'm going to do something more safely. Whatever it is, you take a look at all the risks and you say, here's what I would do if that happened, and then you're all set to go. Lower left-hand side, what's all this going to cost me on a monthly basis? And we're going to talk about that. How much money is coming in? That's called revenue streams. We'll talk about that. A very, very important one that not enough people really think about is the lower right-hand corner called success. In other words, what is driving my efforts to get into business? Why do I really want to do this? Because it's a real tough job. It really is tough. It's very rewarding, but it's very, very tough. If it's kind of like, well, I just want to give it a spin, you're probably not going to last because there's going to be so many bumps in the road. You just say, hey, just isn't worth it. If you have a strong enough why, any what you can withstand. And if you want a real quick reference on that, go to TED.org and listen to a guy by the name of Simon Sinek. He has a whole section on why. And if you have a strong why, you're going to be able to withstand all those bumps in the road. Okay, so now we've got an idea. We've got a plan laid out. How do we convert that into a business? Well, we have to have an administrative platform, an envelope in a sense to make it work. And we're going to talk about the elements that are in that platform. And we're going to go through each of these. In that administrative platform, we're going to talk about a company name, how you're going to organize, business administration, taxes, financial planning. And so number 1 is a business name. If you do not have a business name already, there's a couple of ways you can do this. One is a general name and one is a descriptive. There is advantages and disadvantages to each. So let me give it to you. A general name could be something like Google, Amazon, Etsy. If you didn't know what those companies meant, what in the world would that first image pop up in your mind? If you said Amazon, well, they say, well, obviously these people are doing something in South America or they're having to do something with rivers. Well, it turns out the reason they pick a general name is that gives them the flexibility of doing whatever they want. And if you remember, Amazon first started with books. They could have named themselves National Book Company or something like that. But then when they wanted to get into something else, they would have a problem because how can I sell products that are not books under book companies? So they pick a general name. But the disadvantage is that I have to, as Amazon, I have to spend a lot of money to make sure that you understand what Amazon is or what Google is or what Etsy is. Until I get that idea across, you don't know that. So I have to spend a lot of money doing that. On the descriptive side, it's a very easy to understand. So it's Roto-Rooter, MasterCard credit cards, or in our case, home security systems. I mean, it was very straightforward. The problem we had was when we started out with home security systems, we ended up doing lots and lots of homes. And then the people said, okay, that's great. Now come down and do our business. And we couldn't put a home security sticker on a business. So we had to start another company, which we did, called Industrial and Commercial Security Systems. Again, a descriptive, but it is for that particular clientele. So advantages, disadvantages of a name. The other thing you got to assure is that nobody else is using the name you want to use, and we're going to talk about that. So let's talk about organizational types now. How can I organize? Well, the easiest thing to do is to organize as a sole proprietor. That means you and the business are one. It's easy to do. Use your Social Security. You don't have a whole lot of registrations. You tell the IRS, here's my business, and I'm using my Social Security number as my identifier, and you're on your way. The problem with that is that if somebody, say, comes into your store and slips and falls, and they sue the business because they hurt themselves, they can sue not only the business, but they sue you as well, because you and the business are one and the same. You're lumped in that. If you use a partnership, that's the same as a sole proprietor with more than one member. Now, the advantages of that is that you can split the duties. Somebody can come in with it strong in operations and you're strong in financial, or vice versa. You split the duties and you get a lot more done with a partner. The problem is that same liability that I mentioned before, plus if either partner creates a liability, goes out and spends a lot of money, the other partner is liable for what that first partner did. So you want to be very careful. If you go partnership, make sure you set up a partnership agreement so that you know who's going to do what. To get away from the liability aspect, there's something called an LLC, limited liability company. And of the people we talk to, typically 90+% go the LLC route. Because of that, we're going to talk about some details of how to get an LLC. The advantage of the subchapter S is that it allows you to, it has stock. And so you can sell stock, and you can sell 10% of the company to Uncle Harry and he gives you $20,000 and there's your startup money. But Uncle Harry owns 20%. And if you keep selling it, as soon as you've sold 51% of it and the 51% gets together, they as stockholders can fire you. Even though you started the company, they have every right, capability of firing you and bringing somebody in that they like better. S Corp or C corporations, if you hear of them, are for the big guys. This is the General Motors, this is the General Electric, etc. So there's the big guys. So primarily the small business startups in New Mexico tend to go LLC because it's easy to get and it costs $50. How do you form the LLC? Well, you got to have a name, and we talked about the name part. But what you do is you can, and you have, we're going to talk about registered agent. We're going to talk about articles of organization, and then an optional thing called an operating agreement. So let's get started. On the name, when you use whatever name you pick, and we'll talk about getting that cleared through the state, you make sure you put the name down, ABC Company, LLC, or LC, or L.L.C. or LC, L.C. after the name. So they understand that it is not a sole proprietor. It is a limited liability company. And to assure that no one else has the name, you go to this particular link, a portal on the Secretary of State, New Mexico, and you just click on business search and you put in Wyandotte Flower Company. And they say, we don't have anybody called Wyandotte. And then you know you can use that name. If they start giving you the information on Wyandotte Flower, then you know you can't use it. So that's a way of checking to make sure that nobody else is using that name. Registered agent. In the process, you have to have a registered agent for that LLC. What's a registered agent do? The registered agent is the agent for service of process. What the world does that mean? That means that if the state wants to send you some legal information, they know where to send it. And that has to be a physical address. It could be an individual or business who accepts the legal papers for the LLC. Most of the people I talk to say, well, they can just send it to me and I'll be my own registered agent. And that is absolutely the right thing to do if you want to go that way. But you cannot use a PO box. It has to be a physical address, a physical mailing address in New Mexico. And incidentally on that, if you say, I don't want them to know my address, and then you can hire an agent and pay them so that they end up getting all the information from the state, and then they will give it to you for a fee. But 90+% of the people we deal with end up being their own registered agent. And when you get to this articles of organization and you come to that question, you just put your name down. The articles of organization is the form you fill out online with the Secretary of State's office to get your LLC. It includes the name that we've talked about, effective date, how long you're going to have it. Most people just use perpetual, but if you said, hey, this is a project that's only going to last 3 years, and after the 3 years is over, I don't need it, then you just put 3 years down. What is my purpose? And if it's a general purpose, just leave it blank. You got the name and address of the registered agent. If that's you, you put it down, or if you hired somebody, you put that down. The articles of organization also has an email address and phone number of the LLC, optional, and the address of the principal place of business, plus a mailing address if it's different. And the LLC, is it going to be run by a manager, or are you going to run it? Some people say, I'm going to form the LLC and I'll own it, but the person who's going to be in the office and is going to be running it is Joe or Mary or whoever. They want to know. If you put down, is the LLC only one member, or who are the members? And then you put down who the name and the contact, typically you. And you have to have what's called an EIN and NAICS number. The question is, what in the world is an EIN and a NAICS? Well, an EIN is an employer identification number from the IRS. And we're going to talk about how you go get that. Very, very simple. It's free. And the NAICS number is a North American Industrial Code System. So each industry and subset of that industry has a code. It's agreed to between Canada, Mexico, and the United States to identify their industries. We'll talk about how do you get that. Articles must be filed online, as I mentioned, and when you go to a link on the Secretary of State, you just jump into that and you're on your way. Filing fee is $50. Typically, people just use a credit card. If you want to use a check, you got to get the check to them ahead of time so that they can clear it before you can be accepted. Operating agreement is a kind of nice thing to have, but it's not required, although advisable. What in the world is an operating agreement? Operating agreement is how we're going to run the company. We're going to do X, Y, Z. We're going to be located at ABC. We're going to have so-and-so is going to be the owners or multiple owners. You and your spouse, for example, is 50-50, 60-40. You may want to run a women-owned business because of the advantages. If you're going to contract with the federal government of a women-owned business, in which case you really want to talk to the Small Business Administration because there's advantages to that. Also, if you are a minority business or a disadvantaged business in some other fashion, or a veteran, there are all advantages for government contracting. If you use those you want to talk to the Small Business Administration about. Okay, the operating agreement also has the major thing is what would happen to the business if something happened to me. I flunked the bus test and I don't make it to work and forever. And therefore, do I want my executor of my will to sell the business, to collapse the business, to turn it over to somebody? What do I want that business to do in my demise? So that's a really good thing to put into an operating agreement. Don't have to file it with anybody. All you do is you just stick it in your drawer. Okay, within New Mexico, you go online to the Secretary of State. Here's the portal. And if you say, this is a little complicated to fill this form out, they have a very nice arrangement at the very bottom of their homepage that is a video. Just click on the video and it walks you through things one by one by one. Very good explanation of filling out the form. Okay, don't forget when you get on that form, they're going to want to have an EIN and a NAICS number. And the EIN will cover just a little bit in terms of from the IRS, you get that. And the NAICS number you get from the Department of Commerce. If you forget about it when you get to that part of the the organizational agreement, they will have a link and you can jump out, go to the Department of Commerce and get your NAICS number and then come back. Business administration, you want to have a business checking account. Don't get that until after, for example, you get your LLC, because if you weren't able to get the right name, you'd have to go back and change the business account. When you go get your business checking account, the bank typically wants an EIN number. They also want to have some of them want to have your operating agreement and your articles of organization. So it just depends on the bank. But make sure you have a business checking account, because if you want an LLC, you have to run every dollar that comes in and every dollar that goes out through that checking account. Why? If you say, well, the company is a little bit short, I'm going to put another $100 in the pot, take it out of my pocket. Or wait a minute, I'm going to lunch, I'll just take $100, $50, $20 out of the pot. I'm going to go to lunch. It's what's called piercing the corporate veil. In other words, you have lost your liability protection. Somebody who sues you, if they find out about it with their lawyer, says, we're not only suing the business, we're suing you. You've got equity in your house, we got equity in your car, you got a retirement account. And if the judge agrees that a judgment is appropriate, they come right after that, and your LLC provides you no benefits. So make sure you really honor the checking account and run your business on an arm's length relationship, and you'll be in great shape, because if somebody sues you, they can only sue the business and not you personally. Make sure you get a website going. Easy to do is a one-page business website and you can get the software for free online. Once you go beyond the one page, they want you to pay, but that's okay because by that time you've probably got money coming in and you can afford it. But you need a website because a lot of small businesses don't have a website, and you go to somebody and say, here's my business. One of the things they're going to do is jump online and take a look and, well, gosh, they don't even have a website. They must be a fly by night. I'm not going to do business with them. So generate a website. One pager is fine just to get started. You can get the free software online. Get someone to host it. You have to pay them to host it, not much, and then you're on your way in that area. Make sure you get business cards made up and something you can leave with a client. I'll recommend that something like a trifold, which is no more than just a sheet of paper folded 3 times, and get it printed. And you say, well, where in the world am I going to get that information? Well, if you go to Microsoft Word, they have a whole bunch of formats that you could pick from and then start modifying. I recommend you do it, and once you get it out of there, take it to a printer, and if you've got a color printer, that's wonderful, or take it to a printer and they'll print it for you. But use that as something you leave with the customer, with the business card. Insurance, it's very easy to become insurance poor. People say, well, if you're going to be in business, you got to have insurance for that, insurance for this. Do buy insurance, but only for those things that you cannot afford to be without. So if you can say, hey, I'm going to potentially get sued for $100 and I can absorb put $100 deductible in your insurance. Or say, hey, I can afford $1,000, put $1,000 deductible, because the higher the deductible, the cheaper the insurance. The insurance we started out with was liability insurance. We couldn't afford somebody suing us for $1 million. So we carried $1 million liability insurance, and so that we would be protected. Also, that's determined also by your risk assessment. Pricing. What do I price my product or service at? A lot of people will just do what's called simple markup. So it costs them $1 to get it, to buy it, or to make it, and therefore I'm going to sell it for some markup. The markup could be 50 cents, could be $1, could be $2, whatever it is. One of the things you want to do is go check on your competitors. What are your competitors selling it for? Because if you say, hey, I'm going to mark my dollar up to $2, and your competitors are all selling it for $1.50, you know where your customers are going to go, and they're not going to go to you if they can buy the very same product from somebody else for a lot cheaper. So take a look at what your competitors do. You do not have to underbid your competitors. You could, but be very careful with that, because that's called a race to the bottom, which we're going to touch on. And you all of a sudden find yourself bankrupt because you don't have enough money coming in. So what we did when we were in business is we were priced a little bit higher than some of our customers, but we told them that they were getting a higher value, and we showed them why. Either faster installation or higher product quality or whatever it was that we could provide them that justified the small increase or some increase over what the cheapest competitor was doing. But think about pricing. Depending upon your business, you may have to have licenses and permits. If you're in the construction area, handyman area, something like that, you definitely have to go to Construction Industries Division. If you are in other businesses, you probably don't. So just Google your business with license permits and see what's required, through the state, and you can do investigation there. But you want to make sure you're not operating when you should have licenses or permits, and you don't. Administrative platform still is in taxes. So let's talk a little bit about taxes. There is the registration for taxes, and we talked, remember, about that EIN number? Here is the link that you can go to IRS and get an EIN number. And if you say, well, it's a little confusing, there's a tutorial on YouTube, and you can just jump on that link on YouTube and they'll walk you through it. You have to have a B-10 number from the state. Why? That's your identifier for the gross receipts tax. It's really the same as a sales tax, but in this state, they call it a gross receipts tax because the state's going to get the money on a sale of any product or service, and they could care less who's paying it, the customer or you. So for example, I have a little bit of a small consulting business, and I just charge people a flat fee, and I take the gross receipts tax out of my pocket. Or most people end up saying, okay, this is going to cost $100, and the gross receipts tax is 7 point whatever it is, and you add that on to the $100. So it's $107 and some cents. Now, it turns out that we're going to talk about here registering for that in just a minute, this B-TIN number, and you get that from the state with this portal as shown right there. And you sign up either for reporting monthly, quarterly, semi-annually. And if you are not getting a whole lot of money to begin with, I'd just sign up quarterly. But you have to send them a report at that quarterly point. That's 25 days in the month after the quarter is over. So if you don't, you say, I didn't have any business, so I didn't have anything to report, which I did one time when I first started. They said, fine, we're firing you. We're fining you. I said, why are you fining me? They said, well, you didn't send in a report. And I said, it was zero. They said, well, tough. We didn't know it was zero. And you had to tell us it's zero. Because you didn't, here's your fine, which I paid. And thereafter, I knew I had to send in reports with zero on them if I had zero income for that particular period of time. But they are a very, very, very tough organization. It's taxation and revenue. They will, if you don't pay your gross receipts tax, there are several businesses around town, they've simply gone in and chained up the doors. They said, well, wait, I need to keep the business open so I can get the money to pay you. And I said, no, when you pay me, then we'll unchain the doors. Until then, you are locked up. And major businesses around town have gone out of business because they had somebody that didn't pay this gross receipts tax and they didn't have the money to pay for it. State could absolutely care less. You're out of business. They kill you immediately. No question. Payroll taxes. This is things like the Social Security and the Medicare payments. And that's the 15.3%, which is if you ever had a job, you know you're paying half of it and your employer's paying half. So if you have a business, you're paying for half of the payroll taxes for all of your employees, unless you are self-employed, and then you get to pay both halves. Now, don't forget you take the company half off your taxes, at least, when you set up your taxes. Federal and state unemployment, called federal FUTA and SUTA, federal unemployment and state unemployment, very small amount. Get with your accountant and take care of that small amount of dollars, but make sure you take care of it. Federal income taxes, as we all know, is due this year on the 18th of April. So it's annually. But if you start making some money in your business, they're going to want you to file quarterly so that they have that money on time. And if you get to be a decent size, they're going to want it weekly. Same with the particular, I'm talking about the gross receipts tax. I apologize. Gross receipts tax. The income taxes typically for feds and state are annually, but if you start making some real money, they're going to want it quarterly. Gross receipts tax is what I was referring to. If you start really making some money, they're going to want that weekly. But they will tell you that when you register for the gross receipts tax. And if you have some property, either a office building, vehicles, or whatever, you're all familiar with paying your property taxes twice a year to the county. Okay, the identifiers for the collection of gross receipts tax, that's the B-TIN number, is required. You have to do that in the state. If you don't and they catch you, it's going to be murder. The reason is that I've known people that says, well, hey, I can get away with it. So they get away with it for a while. But when you finally get nailed, it not only costs you the amount of back taxes that didn't get paid, you then get to pay the fine and the interest. And I've seen where the fines and the interest are equal to the cost of the original back taxes. So if you didn't pay it to begin with, later on, you may end up paying twice as much. As I mentioned, paid by the seller regardless. And the rate is determined by the locality the product or service is delivered. So the rate in Albuquerque is different than the rate in Corrales, is different in Las Cruces or anywhere else in the state. You have to know where you're delivering it. And when you get your B-TIN number, they give you sheets of paper and they say, okay, this community, here's the rate. And you have to know where you deliver it and charge that particular rate. And then when you turn in your money, you have to turn it in based on the locality and the particular applicable rate for that community when you send your money in monthly or quarterly to the Bureau of Taxation and Revenue. Okay, there's again your B-TIN number registration. Let's talk a little bit about financial planning and record keeping. Accounting. I've talked to lots of people and they may be the world's best plumber or carpenter or whatever. And I start talking about accounting and income statements and balance sheets, and they just roll their eyes. They said, there's no way I can do that. Well, it turns out that you got to ask the question, why do I have to do it? And the reason for that is it'd be like going to a football game and not having a scoreboard. How do you know where you are? Am I making a profit, or am I creating nothing but losses? Am I getting ahead, or am I going behind? You have to know what the score is, not only for yourself and for your business planning, but also for paying your taxes. The tax people want to know, hey, did you make a profit or did you have a loss? Because if it's a profit, they want their share of that taxes. So you have to have accounting. What's called a chart of accounts? It's merely the number of bins or boxes that you're going to keep track of your records, income, and expenses. So for example, you could just say, hey, I got one box called revenue. I got one box called expenses, and everything's dropped into that box. And there is nothing wrong with that. The only problem is if my cost of products are starting to go up, I will never know it. I'll just know that, wait a minute, things aren't quite right. I can't find it because I've dumped everything together. So in your chart of accounts, you may want to, for example, when we were in business, we said we want to have a differentiation between the sales of product, and then even within the product, is this going to be for alarm systems, video systems, access systems? We separated them out. Same way with your expenses. Is your expenses going to be different for each of those, so that I can know whether, hey, wait a minute, this particular line is really profitable. I need to put some extra effort into it. And this one over here is at a loss. So holy cow, I got to either change my pricing or change something so I don't have a lot of losses, because losses is eating into your profits. If you have enough losses, you have no money left, and it's called bankruptcy. So chart of accounts is important, but don't remember, if you have too many boxes, it takes an awful lot of work to separate everything out and putting them in each of those boxes. So it's kind of a balance. Revenue expenses, I think everybody understands what money is coming in and what money is going out. And you recognize if more money is coming in than going out, it's called a profit. If more money is going out than coming in, it's called a loss. So most businesses to begin with are ended up in loss. So you say, how much money am I going to have? We're going to talk about that in terms of how much you have to get started. Don't forget, you really need to be set up for credit cards. Lots and lots of people are paying with credit cards. So you just go get a merchant account. You can just Google merchant account. There are a lot of places you can go get it and get a credit card arrangement. And I'd suggest making sure you get it for at least the two majors of Visa and MasterCard. If you want to go get Discovery or American Express, that's purely up to you. But each one of those times you charge something on a credit card, you're going to pay the fees, typically 2 to 3% to the credit card company for handling that process. Here is a easy, simple income statement. And this is the way you keep track. This is the scoreboard for your business. And what it is there is revenue coming in and there are expenses going out. In this case, they subtracted right at the beginning the cost of goods sold. In other words, what did it cost me that dollar to either buy it or to make it? And they took it out right at the beginning. You don't have to do that, but you can just leave it as just all the money coming in. All the money going out is not only your administrative expenses, but you could have put this cost of goods sold down here. Either way is perfectly acceptable. This is called operating profit. In other words, money went out, coming in, money going out. Difference is the operating profit or a loss if expenses are greater than the revenue. What they did here was they put in interest and taxes as a subtraction from operating profit. You could put all of these in under expenses and just come down here to a bottom line. It's purely up to you. But the reason for this is you can be very smart, look very smart. When somebody says, what's your EBIT? You say, what the hell is an EBIT? EBIT is earning before interest and taxes, EBIT. So earning profit before interest and taxes. So this is EBIT right here. And you may hear a term called EBITDA, which is is earnings before interest, taxes, depreciation, and amortization. Depreciation, as you know, you may not be able to expense an item, you buy a truck, and they'll only allow you to expense a part of it each year for the next X years. So that becomes a depreciation, so it goes below the line. The net income is the bottom line. That is the amount that you get to keep, in a sense. So what we want to do is we want to make sure that these are positive and not negative, because if they're negative, you have to dig in your pocket and come up with that negative. We're going to talk just a little bit about that in a minute in terms of how much money you have to have. Next one is a balance sheet. Why do they call it a balance sheet? Well, it turns out that the amount of assets, that's the amount that you own, anything you own, this number down here, has to equal the number you owe plus your equity or what you've got into the business, in a sense, how much you own of the business, how much of that business is yours, because the rest of it is not yours, it is owed out to other people. But assets equals liabilities plus equity. So this number down here, the 470,200, is equal to the 470,200. Why they call it a balance sheet. So we want to make sure that this is positive. If this is negative here, banks really get excited. Numbers are equal. That means that what you owe is greater than what you own, and the banks are definitely going to run away from you as fast as they can run. Okay, budgeting. Budgeting is the very same as we looked at, but projected. In other words, it's guessing. It's looking out in front of you. A income statement, which is over a specific periods of time, look backwards. What is history? Same way with a balance sheet, which is a snapshot of what is the financial health of my organization at a point in time that exists today. A budget looks forward. It's saying, I think I'm going to have this kind of income. I think I'm going to have these kind of expenses. And then I'll see how much money I have to have. So we project our revenues, our sales, obviously our costs. So we know how much we're going to have in profit or loss. So how much money am I going to have before I start this business? You can set that up by taking a look at a projected budget. Specifically, here's a really, really simple way just to give you the idea. First month, I got no income, but I've got some expenses in labor, utilities, etc. Excuse me. Go back. Oops. Okay, let me do, oops, I ran away with it. Slideshow, current slide, okay. We're gonna go up to the previous one. Okay, now we go. Slideshow on the current slide. Okay, here we go. So I got $50 in labor, utilities, phone, etc. So I got nothing coming in and $130 going out. So I got a loss of $130. So I got to have $130 in hand to pay for this. Next month, I got $100 coming in, but I still have all these expenses of $160. So I still went 60 in the hole, which added to the 130 is 190. So I better have $190 before I get started in the business, or else I can't pay these bills. The following month, I got 200 coming in and my expenses are only 180. Yay, I got a profit. I got a $20 profit. This is called break even. When your money coming in is equal to the money going out, it's called break even. So we got to break even in the third month, which is phenomenal because most businesses will end up running way down track before they start getting to break even. What you do is you add up all of the amounts of the losses, which in this case, we just summed them down here. And says, in this case, we had to have $190 in our pocket before we opened the business, if our numbers were good. And you got to really put a contingency in here of some kind of amount because you never get these right because you always forget something. Or maybe the revenue isn't coming in as fast as you would like to come in. So this is probably going to be a bigger number. So it tells you how much money you're going to have before you even open the doors. So as you come along and you make more revenue each month and your expenses are going up slower than the revenue is going up, then your profits are going up faster also. And that means that you paid yourself back for the 190 by the 5th month here. And then you're clearly headed off into profitability. Very simple income statement, but do an income statement and you can project for yourself exactly how much money you're going to have. Where am I going to get the money that I need to start the company? Turns out that there was a magazine called Inc. Magazine, INC stands for Incorporated, and it's a business magazine for small businesses. The business interviewed the 500 fastest growing business CEOs, presidents, and said, where did you get your money when you started your business? And by far, 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 the majority of people got them from savings, friends, and family. They did not get them from an investment banker. They did not borrow them from somebody. They ended up getting them internally. Now, a lot of businesses say, I don't have that kind of money. Well, how can I get the money? Well, then you're going to have to resort to things like perhaps getting it set up as a S Corp and selling some of the stock to people you know who would be interested in owning a piece of the action. Now, remember, that's not the company's not all yours at that point. It's shared, but you got the money to start the company with. People say, well, I'm going to go get a grant. The problem is there are grants, particularly for nonprofits and other aspects of business that the people really want to see going. Like, hey, wait a minute, I'm going to make something for autistic children and sell it to, they might want to perhaps help you out because they're big on autistic children. But if you're saying, hey, I'm a cleaner or I'm a plumber or whatever, not a whole lot of people are willing to give you money so that you could start a plumbing business. So grants are not all that available. Worthwhile checking it out, but very few in there, mostly savings, friends, and family. Once you get started in the business and you make profitability, you can then turn into loans. Another option is crowdfunding. Crowdfunding is available both as I'm going to crowdfund and get you to give me money for my business, and I'm going to give you a sample from the business. I'm going to give you a t-shirt, whatever, and you may be able to get people to actually give you some money. The problem, I've talked to people who have done this, and they said that crowdfunding, which you have to do through an intermediate agency, who's a profitable agency, and you have to pay them to help you run that crowdfunding. And if you don't, for example, if you said, I want to raise 50,000. If you raise 40,000 and you don't raise the 50, you got to give the 40 back. You cannot keep the 40. You have to have attained your goal in order to make the crowdfunding work. And the other company, the intermediate, gets paid whether you get your money or not. So you fail to get your 50,000, they still get paid because they put in the effort. Also, people have told me that you can figure on as much as 2 people working full time for a couple of months to get a crowdfunding effort going. I mentioned the sale of equity to Uncle Harry. Loans, after you get the business going and you show profitability, absolutely go back to the bank. You really want to set up an arrangement with the bank, relationships, so that you can get a line of credit at the bank after you get started and show profitability, so that should you run into a little bump, you can go have a short-term borrowing and you get the money and you use it, you pay it right back within a few months. Bank is happy because they get their interest. On your team, don't forget, you really want to start out with an accountant of some form. We didn't have the money to begin with when we first started, so we started out with a bookkeeper. We couldn't afford a CPA, but we did have a CPA help set up our chart of accounts. But we lived with a bookkeeper for a few years until it got complicated, and then we went to a CPA. But you really want to have an accountant to do things like your taxes. It takes so much time to do business taxes and all the rules and depreciation. There's something called a section 159, I think it is. There's rapid depreciation, things of that sort. Accountants know all that stuff. So think about having an accountant that you can work with. Lawyer, I only use lawyers when I needed somebody to check on whether I was doing things legally. So for example, I never asked a lawyer, hey, get me a contract that I could use for, no, I went out and got a sample contract. I took it to the lawyer and says, is this consistent with the state laws? And they might say, well, you need to change this, and fine. But they had something to start with. If they generate it on their own at $300-400 an hour, it gets expensive. Create a relationship with a banker early on. And because of this line of credit that I mentioned, we created a real good relationship with the banker. I'd drop in maybe once a quarter or so and talk to the banker and say, I don't need money, but here's what's going on, expanding business here. Well, then we got a really big job when Intel came in on West Side. and went to the bank and said, hey, this is much bigger than probably I could normally sustain. But he said, no problem. He says, we'll get you the money. Now, he set up all sorts of firewalls in that arrangement, like a lock key arrangement whereby the check from the prime contractor went to the bank first, and they took their money and then put the rest of it ours in our account. But relationship with a banker pays off. Insurance agent, make sure you get a business insurance agent, not a home insurance agent or something like that, and have them get the best liability protection if you go that particular direction. One of the major things that not enough people do is you want to have a counselor or mentor. The reason for that is that the price is right, and those people have been there, done that. They've got a lot of bumps and bruises by hitting all the potholes in the business road of life. There's no reason for you to have to duplicate this. We'll have them tell you, hey, if you do this, you can expect that sort of thing. And it avoids a lot of potholes. So you don't necessarily have to do everything they tell you, but think about it and just say, hey, that makes sense or it doesn't make sense in my particular case, but at least get the information. Okay, we've covered a lot of information on creating this business. How am I going to put it all together? Well, you create what's called an activity schedule of events. Who is going to do what, why, when, at what cost? And you set up, you can use just a simple spreadsheet kind of arrangement, set up chronologically, and you're constantly updating it. So let's take a look. This is just a very, very simple form. Just the various processes, what it is that I'm going to do. I'm going to go out and get my LLC, for example. Who's going to be responsible? Me. I'm going to start it the 1st of May. When did I actually get it done? Well, I got it done on the 10th of May. That's okay. Actually, what did it cost me? It cost me $50 or whatever it is. And here's my note. You may want to prioritize these. You could color code them. But if you don't do this, you say, well, I'm just going to do this all in my head. There is no way you can possibly keep everything in your head to do all the various steps. And there is a step-by-step issue that it depends on your particular arrangement, your particular business. You may or may not want to have a storefront. You may or may want to have contracts in place ahead of time. Whatever it is, here's your checklist. So think about having a schedule of events. So let's talk about a summary. Remember, we talked, number one, you have to have a customer problem. No customer problem, no business. We provide solutions for that. The customer will pay for. And you're going to deliver more value, obviously, than the money they're giving you. Otherwise, they're not going to buy it from you. And then you keep getting more and more customers, and you keep them overjoyed, not satisfied, but overjoyed. Why? Because every happy customer is going to want to look good with their peers, with their friends or relatives. And they say, let me tell you the job I got done, and boy, did it come out nice. There's the best advertising in the world. In other words, if you say, hey, I'm going to have it there next Wednesday, make sure you have it there not only next Wednesday or maybe even on Tuesday, so that they are overjoyed and they're telling everybody how good you are. Don't get it there on Thursday or Friday, because they're going to say, don't go to this outfit. They're a schlock outfit and they XXX. So make sure they're overjoyed and you will be in business a long time. What does it take? Well, it takes a lot of passion and a lot of commitment on your part to succeed. I mean, there's a lot of bumps in the road. And remember that lower right-hand corner of that lean business plan, that success factor, your why. If you don't have a strong enough why, first thing that comes along is, this isn't worth it. And you pitch it. Well, you've spent a lot of money, spent a lot of effort, spent a lot of time. You didn't need to waste all of that. You could have just said at the very beginning, I'm probably not cut out for this. You could have saved yourself. But if you have the dedication, the commitment, and the passion, you can really make it work. And it becomes very rewarding. Okay, you got to have the product or service the customer can pay for. How? Remember, we talked about that, talking to the customers and finding out. What is your vision? What is your goals and action plans? It's always great to have this. A lot of people tell me about their vision. I want to do X, Y, Z, and my goal is to do that. It's wonderful. When are you going to put that into action? When are you going to actually make it happen and quit talking? That is the event listing that we talked about. And then you look at that event listing and you say, well, did I get that done when I planned? If not, was I really serious about this business or not? Always moving forward, always action oriented. You have to think about it. Sure, you got a plan. But if you don't put that plan into effect, you're the same person who wants to learn how to swim and never gets off the side of the pool. I don't want to get wet. If you're not going to get wet, you're never going to learn how to swim. You got to deliver on all the promises. I talked about that. You got to comply with all the legal requirements. I talked about that because if you don't, it's pay me now or pay me later. And you got to be willing to start a business. I was a poster boy for exactly that. I did a lot of research before I got into business, and I was hesitant. I had a full-time job, and I did. Turns out that our son got to a point where he said, "You're either going to, participate in the business, which you'll eventually get, or you can keep working for somebody else." And he said, "Well, let's start the business." So away we went. What's it take? Got to remember that this is not a short process. It's a marathon. Persistence pays off. You're going to run a lot of highs, a lot of lows. If you quit on a low, then it's a wipeout time. But you have to hang in there and hang in there and hang in there. It's a full-time job. If you say, well, I'm working, I don't have the time. Well, that's okay, but that's called a hobby. And there's nothing wrong with hobbies, but hobbies are not really a regular business. They're a hobby. And they're fine, they're perfect. And then Etsy has a lot of people on there, and that's great, but it's not a full-time business that you're going to be able to morph into. But if you want to just do it on a part-time business basis, you can do it. Take a lot of the things I talked about, use those on a part-time, but don't figure that you're ever going to have really a sizable business unless you really dedicate yourself to it. I mentioned about the race to the bottom. If you start pricing things lower than your competitor, lower, pretty soon you don't have enough money to pay the bills and you're out of business. Don't use excuses. I can't tell you the number of people I've told, say, if it wasn't for this, I'd have been successful. No. Forget the excuses. Just put your head down and keep plowing. Got to keep the business customers delighted. I mentioned that. And stay in touch with the customers, because it turns out that if you do, you're going to find out the customers have new problems and you can solve them. We did. We found that out. Timing. Turns out there's a company that tried to figure out why businesses were successful, and they found out it wasn't the funding, it wasn't the leadership, it was the timing. It was the Facebooks of the world that just happened to hit at the right time when the computer world was capable of providing the data capability and the communications capability that made Facebook famous. Google, same way. Google was not the first to come up with the search routine, but they came up with a more successful search routine and they made it pay. Is your business one that is subject to being the right time? Make sure you got enough money, because if you don't, you're going to run out of money before you get very far down track and the business collapses. Cash is king. You don't spend the money to begin with unless you positively have to. Our first desks were folding tables. Our first chairs were folding chairs to keep money, cash flow down. And then as the cash came in and we put it in the business, then we could start buying desks, etc. Avoid the attrition by getting counselors or mentors. People have been there, done that. So you have to be willing to go for it. And my reaction is go for it, get started now, because it's a good time to jump in and really go. I'll take any questions you have. And while you're generating your questions, I want to mention that there are resource partners. In addition to SBDC, there's SCORE, where I'm a member of there, for mentorship. West, a superb organization, Women's Business Center program. Agnes over there does a fantastic job, and they're located in several places around the state. Although they cater primarily to women, they are working with men, and they have the advantage of having an incubator where they're off of Lomas and Broadway. So if you're into that area, you need an incubator, or you're a woman, great place to go. If you're a vet, make sure you see at the very bottom, talk to Rich Koffel. Outstanding programs for vets. Make sure you hit that. And then SBDC has a great program for training, which I mentioned, and counseling. They'll assist you with loans. Super resource. So let me go back and see if you've got any questions. Anna, do you know if any questions showed up?
I do not see any questions.
Okay. Remember that to keep planning, keep working, keep researching, but keep relationships with the customers. The customers are the driving force. You say, well, I got to worry about funding and license. Absolutely. But if you don't have customers, nothing happens. Nothing happens without a sale. You have to have a sale. You have to have money coming in. And the liquid cash is a lot like blood in your body. If you've got the cash, your business stays solvent, it keeps operating. If you have blood in your body, you're still alive. You run out of blood, you know what happens. Same thing, your business, if it runs out of cash, it dies. So you don't want it to die, so you watch your cash flow on that process. But with that, I wish you all of the best in your business efforts, and make sure you come back and talk to counselors or mentors with any issues that you have that you think of, because all of us want to see you succeed. Our jollies are to see a lot of very, very successful businesses and jobs that you're generating. If you generate those jobs, then you are progressing the community and you're making advancements in the economic benefits to the community. We want to see you succeed and generate jobs. So we're here to help you become successful. Best of everything. And if you have questions, ask.
Thanks. Thanks so much, Vic. No more questions, but a comment that
Okay.
said really great
Yes.
presentation. Thank you.
Thank you.
Yeah.
Thank you. Great.
Thank you so much, Vic.
Good luck.
Always such a pleasure to have you. And thank you so
Good.
much for your attendance. And we'll
Great.
go ahead and wrap this one up.
Thank you. Is there anything you want to comment on later, or shall I go ahead and take off?
You can go, or you can
Okay.
you can stay for just a moment. I'll stop the recording right
Okay.
now.